Good morning and welcome to our webinar. Thank you for dialing in. We're here to give you an update on the news that was announced in May that 10x was acquiring Coreshares. The deal is still pending regulatory approval, but we are further along in our journey and we wanted to make ourselves available today to answer any of the questions that you may have as investors, as our clients, and as members of the financial services industry to ask us directly. So we've got the new combined management, and firstly I'm going to introduce you to Toby van Heerden. He has a long career that started as an actuary and an asset consultant with Alexander Forbes, and more recently he was with 91, working in various roles all around the world. He took over the reins at 10x about a year ago, and then he is now the CEO of both the combined 10x and Coreshares. Morning, Toby.
Morning, Michelle. Thank you very much for the time, and thank you everybody for dialing in. It's a cold, wintry day here in Cape Town, as you can see from the outside, and I can't believe a year is almost passed, since I've joined. It's been a hell of a journey so far. I think we've sort of accomplished probably 5 years worth of work in the last 11 months. One of them being the Coreshares transaction. That, as you said rightly, we're still waiting on regulatory approval. And so what I would like to do is just give you a bit of a sense of, why did we do the transaction, what was the merits around it, and what's the benefit for you as IFAs, as the sort of sophisticated buying market out there. So when we set along our strategy in the sort of end of last year, one key thing that the board, the shareholders of 10x and myself pushed quite hard was to say that we need to become the largest independent passive business or rules-based investing business in South Africa. That is our goal, that's our aim. We think that could be a tremendous tool for IFAs. We think that could be a tremendous tool for the rest of the investment market in bringing an independent player to market, whereby we give you, as investors, a low-cost beta replication strategy. So whether that's SA equity, a balanced fund, fixed income fund, very low cost, but still retaining the quality. And in that regard, you can then actually build a portfolio that is very, very cost effective for your clients. You would know that previously, and under my predecessor, we had a bit of a different strategy, and certainly we've changed attack in our strategy in a big way. So we've actually come up with a new term at 10x in what we call this new chapter, and Coreshares for us is a very, very important part of this. So previously you would know that we were very aggressive in the direct-to-consumer space, attracting clients from all over the country. We didn't boast well with the IFA market, and I think part of the Coreshares transaction is really to show you as IFAs that you are important to us. That's a part of the business that is very important to us and that we want to build. To that regard, we as management has put our own capital in behind this transaction to show you the value of this business, the value that you can bring to our business. So we really believe that you can be supportive to this. We believe you can benefit from this. So what we want to bring to you is scale. We want to bring a large tool and a building block that you can have in your armor to build portfolios. So scale is super important in passive. Your active managers can typically run with very low numbers of AUM, creating very juicy alpha. But in the passive space, it's all about scale. So bringing Coreshares in with their full suite of products, adding that to our product set, I believe could be a tremendous tool for you as IFAs. Being independent is important for us because what that brings we can actually have a full meritocracy in terms of bringing our fees down. We can eke out all the efficiencies that we need to bring you the sort of the lowest cost offering possible. So, in our offices here, and unfortunately we can't zoom out now, there's no bells and whistles, there's no fancy balls hanging from ceilings and stuff like that. It's a place where we work, it's a very effective space where we work, and we want to add value. So that's just, it's low cost, it's the vanguard from the old days that we want to build in South Africa, we think, and we can do it, but with your support. So it's absolutely critical that we get your support along this journey. I wish I can stand here and say, I apologize for the past, but I wasn't part of the past. I was a consultant, as you said, from my previous days. So I've worked as an advisor. So there's no way in my, being honest with you guys that I can actually say, you don't do a good job. I believe IFAs does a fantastic job. They've got a very important part to play in our industry. They remain guardians of capital, and that's a super important role that you have. So we want to help you in that journey, and so you become a very important part of our distribution team. Gareth will be running with that business. It'll be critical for him to get you along that journey, and we're looking forward to your support and your questions as well, so we can deal with those. Thanks, Michelle.
Right, so from my side, hello everyone. Hopefully many of you already know me. My name is Gareth Stobie. I was formerly running the Coreshares business and will be integrating with the 10X management team, very much in the same role in terms of building out product, ensuring that our AUM trajectory keeps growing in a healthy manner, and looking after key commercial aspects. I think, as Toby says, this transaction has many synergies, certainly at an investment philosophy level, which Anton will touch on just now, very tightly aligned. And as you probably have gathered, both businesses followed a similar sort of journey, both as challenger brands, contemporary businesses that had this low-cost investment approach. At Coreshares, over the years, we worked really hard in the intermediary market, and those are various intermediary channels which I'll touch on, to promote the value of these types of low-cost passive products. Maybe to share some of those work examples. So in the DFM space, for instance, I'm proud to say that we've got some of the country's leading DFMs using some of our Coreshares building blocks, for instance, our global beta product, our total world product, and our top 50 strategy, which now has over 4 billion under management, inside their solutions to build contemporary products for their underlying clients. In terms of our ETF range, a lot of the stockbroking community would know us through using our ETFs either as a core allocation inside clients' portfolios, or from a completion point of view, or to perhaps get some global exposures. And this product set is evolving and growing. The 10X have done incredibly well to build some very large and successful balance funds. So that's a part of the market that we're going to be focusing much more on, ensuring that all of these products are readily available on LISPs. And those that have seen me speak at conferences before will know that what we advocate for at the passive market, is to reduce the product cost of the overall value chain for clients. That value chain making up obviously the product leg, the advice leg, and the platform leg. And by having a more efficient product tier, it allows advisors actually to retain more margin in their business, because they're not sacrificing margin to bring down the total cost of that vertical chain. Our other observation, as we've been building Coreshares and now in the 10X environment as well, is how the growth of passive globally, in a funny sort of way, has been in parallel with the growth and development and professionalism of the financial advisor market. And so we are strong advocates for the value of advice. Gamma, as Morningstar has coined it, ensuring that clients in particular from a behavioral finance perspective stay the course, that they interact with products correctly, that they're in the right tax wrapper, that they're on the right asset allocation, and so forth. So we will continue to advocate and encourage clients to seek financial advice, and we will be sponsoring events such as Humans Under Management, which is coming up in a few weeks' time, and really giving credit to the incredible work that the advisor community does in the market in terms of guiding families through very difficult markets. And as you know, we've had some very tricky markets over the last while, and some tremendous stress for a lot of families out there. And without advisors, those families would be poorer for it. So I look forward to continuing our journey in this combined entity. Our whole team is very excited to be joining the 10X team. Whilst we don't have a fancy office here, Toby, we do have a putting green which you can't see off camera, and it's a fun place too. And we've made friends with our colleagues here, and we really are looking forward to showing this combined sort of stronger capability set. In terms of that, I think from an investment personnel point of view, it's been wonderful, not just linking up with Toby and some of the other executives, but having people like Anton Esser join the 10X executive team. Anton's got very deep experience in asset management, particularly from his days in the UK, and actually led the Legal and General investment team in the UK, which is a massive asset management business, very focused actually on passive and fixed income, both core strengths of Anton's. And so I'm delighted actually for my portfolio management team and some of the investment experts in my team that they're going to be filing in under Anton and under his stewardship going forward, because I think that's going to bring a lot of robustness actually to everything. Yeah.
Great, thanks Gareth. Yes, good morning everyone. So I have the great task of bringing together these two fantastic investment teams and building out our investment proposition. And the great thing is it starts from a point whereby everything is very well aligned. I mean, our philosophy and our investment philosophy is very simple. It's really built around three core areas. Firstly, we believe in the value of long-term strategic asset allocation. We are not stock pickers, we're not tactical managers. It's very much a long-term focused investment process that we have across both businesses. Secondly, is this obsession around costs. Costs matter in every single form in this industry, be it in trading costs and therefore maintaining low turnover, be it in fees, etc. Costs are really an obsessive part of what we do in managing client portfolios. And then finally around diversification. You know, it's crucially important that we have diversification across securities, across asset classes and across markets. So the philosophy both at a Coreshares level and at a 10X level is very aligned. It's built around those three kind of corner elements of what we do in terms of how we manage money. And that's really important to us. And then when you think about 10X, you think about something which is a very, very clear way about in terms of what you get. So building that out with the collective team is a crucially important part of where we are and where we're going. And I think this kind of points to the point that was made that Toby made, is around ultimately, you know, we believe in this world of index and active absolutely coexisting. Index, if you look at what's happened globally, has grown significantly, but it's grown significantly very much alongside active management. Index is crucially important in terms of managing down costs, so that in the end the client outcome net of fees is something which is delivering a great result. It's not a question of simply one or the other, and that's very much the ethos that we have in terms of what we do, in terms of product design, in terms of solutions. It's very much what we did in the UK when we built out the Legal and General business, and it's very important in terms of when we set out to you is that we see the two being very, very nicely aligned. How do we do this? Well, there's three elements of what we do and the way we think about it. Firstly is multi-asset funds. 10X has over 15 years experience in managing multi-asset funds on behalf of pension funds and consumers. The track record has been fantastic. Our main flagship fund, the High Equity Fund, has delivered top quartile performance over the long term, and that's crucially important in terms of that is gross of fees, so net of fees obviously it's even a better result. It's actually one of the largest funds in the sector with over 15 billion rand in assets within the High Equity Fund. And we continue to develop this out. We continue to look at opportunities in global markets, continue to look at how we can diversify and add value to the end clients. The other point really to make is that actually the fund which we run, the High Equity Fund as an example, has the lowest total investment cost in the market. So crucially important, once again, that point around fees and costs in terms of how we run the portfolio. The second thing is around building blocks. So in the end, clients will want to have allocations which they make, which are alongside or separate to the multi-asset funds. With the integration of Coreshares, we will have 18 single asset class building blocks, 10 ETFs and 8 unit trusts. And this will cover both local and global markets and a variety of asset classes across both those markets. And we will look to continue to build that out. But it's crucial that we're able to provide individual building blocks which can be added to multi-asset solutions or on a standalone basis. And that kind of plays very nicely to the third element of what is crucial for us in terms of how we build this business is around solutions. In the end, what we do not want to be is simply a product seller. We want to be working in partnership with key relationships because in the end we want to design solutions which are aligned with the end customer. And working with the likes of yourselves, who are so closely aligned and so close to those clients to build solutions, bespoke solutions for your clients, is what we want to be seen as. 10X will be seen as the solutions provider in the SA market. And then just a final couple of words on team integration. So with the addition of Coreshares, we will now have 11 people in the investment team, so it's a substantial team. That's across portfolio management and solutions. The team's been working very closely together, fantastic culture and alignment and some good relationships being built. So it's actually going to be a very easy part of my job bringing both Coreshares and 10X together in terms of managing portfolios. A big focus for us, really to deliver on the scales and to drive down costs, is around systems integration and tech development. So that's a huge part of our objectives over the next 12 months, is to get better and better at straight-through processing to ensure that costs continue to be managed down across everything that we do. So yeah, in conclusion, I'm very excited about firstly working so closely with Coreshares, but more importantly working very closely with yourselves to build portfolios and build solutions for our common clients. And with that, Michelle, I'll hand it back to you.
Thanks very much, Anton and Gareth and Toby. So now the floor is open, so please use the Q&A tool to ask us all your questions, and I see some are coming through already, so we're going to jump straight in. And I think I'm going to start with the difficult one, which I'm sure is the elephant in the room that we're going to address head on. So Toby, maybe you can take a crack at this one. So from Jeremy, the 10X marketing narrative aggressively suggests impropriety where advice and active funds are used. This is somewhat offensive to the advice-based part of the industry. How can we believe that the 10X leopard has truly changed its spots?
Jeremy, thank you for asking that question, and let's deal with that elephant straight on. Let's first take a step back and provide you some context. If you look at us as a business, if you look at the industry, there's always a bit of overlap between what we do. There's always a bit of competition. If you look at, Coronation, for instance, they've got 50,000 direct customers. My old firm, 91, they've got more than us in terms of direct clients. Similarly, Alan Gray, I think they've got even more than Coronation. So across the patch, there's businesses that's got this, what we call the direct-to-consumer business base. So that's the first thing. The second thing is more to Jeremy's point, I think, is around how we have positioned it in the past. Now, Jeremy, the only thing I can say here is you gotta go with me on this one. And firstly is I come from an advice-led business. I was a consultant, I was an actuary, I was an active manager for 25 years of my career. Similarly, the people that we've brought into our senior management, so we've got a whole new senior management. So it's myself, came in September last year, Anton came in November, Anton again comes from Elgin, active and passive, advice-led businesses that he's run for 16 years in Elgin. Caroline Naylor-Wren comes from Innate, the Liberty platform. She came in May last year. Gareth in the team, Tim Merriweather, our CFO, has been the longest surviving member from our exco, who's been here for all of 2 years. So it's a brand new executive. The people we've brought into the business is very much aligned with the strategy. Our board and shareholders is very much aligned with our strategy of supporting the IFA network. Now, that said, we need to do a couple of things. The first is, I think our message as a firm, 10X, needs to change, where clients have the option to say, if I want an advisor, I'll use an advisor. And so giving that optionality to clients in our marketing, in our press messages, I think is absolutely key. And we're doing a hell of a lot of work to make sure in our press communications that message is starting to get through. That's the first thing. The second thing is where we want to partner and work with you. And I think there's two components to that. The one is in products. The second is, and this is the bit I think most people don't know about 10X, is that as we are an investment-led business, we're also a tech-led business. And we're in the process of bringing in an additional technology team into our business, and our technology development team will probably be as big as our investment team in the next couple of months. And what we want to do here is build tools for the IFA and the advisory market to support you in your businesses. So this will be something that is a value add that we want to roll out for you as advisors to help support your clients better. And it's a tool we want to give to you. So that, I think, is just a couple of snippets that I can give and say, take us to task on this, and please do. I mean, we're happy to, if something you feel is wrong or is not right and we should change the message, we're very happy to talk about it. Our emails are open. You can email us, you can contact me. Very happy to chat about it. But that's the honest answer, Jeremy, if I can give it like that.
Thanks, Toby. From Ryan, will the Coreshares and the 10x funds be rebranded and available on most lists? When will advisors be able to contract with 10x?
Shall I take that?
I think so.
Yeah, okay. So the plan at this stage is for the Coreshares brand to hang around for around 6 months after we achieve regulatory approval. And that's just to provide some continuity in terms of awareness around our product sets and so forth. It'll be Coreshares by 10x, and then we'll be slowly migrating and as the regulator allows and as the companies change names and so forth, moving those products into a 10x brand. Many of the Coreshares products are already available on most of the lists. I think literally 95% of the lists, our headline products are on those lists already, so the top 50 and our total world products, for instance. The big opportunity that we see for advisors is our entrance into the multi-asset space. And we're going to be inviting IFAs to a series of workshops and events probably early next year, taking you through the methodology of those products, the pricing of them, and really making them very broadly available to the IFA market. So clearly LISP access is key, because once there's LISP access, then advisors can readily use those products within their solutions. As I mentioned earlier, we already have a very strong relationship with the DFM fraternity in South Africa. In fact, in a couple of weeks' time, we're hosting a conference, which I know Michelle's going to talk about, where we're actually hosting a DFM panel, talking to the DFMs around how passive tools are used in a contemporary manner, putting solutions together. So many advisors might find that they interact with our brand less in a direct manner, but through other solutions that they've bought from some of the other leading multi-managers in the market who we obviously are working with. But both avenues will be available. And then, of course, I also touched on our ETF range. Those are listed securities. They're trading on the JSE. They're readily available. Michelle is well known in that market in particular, working with all the private client securities businesses. We also find that in the traditional advisor market, where advisors are using personal share portfolios as part of their overall solutions, you'll see more and more ETFs kind of in that space too. And our track record there speaks for itself. I mean, we've had lots of really good first-to-market products that we've brought out. A lot of products where we've listened very closely to clients. I mean, our global dividend strategy, for instance, was launched almost entirely based on feedback that we'd received from the private client securities market in terms of what they were looking for and the types of exposures that they were looking for in solutions. I'm probably rambling now, but I think I covered everything.
That's great.
Michelle, I think just to add to that, sorry to interrupt, is we will aim to do it with the least disruption possible for the IFA market. So there will be a rebranding, but it doesn't require reballoting or anything like that. Yeah. So the only thing that will be different is instead of seeing Coreshares, you will have the 10x branded fund.
And I feel pretty confident that when advisors get to the point where they need to communicate the 10x brand down to their underlying client base, that's going to be very well received. I think certainly it's been my observation since joining the 10x business that the 10x brand is well liked just in the general market. I mean, my immediate peer group, just on a personal level, when the 10x news broke, everyone it was warmly received in terms of how many people actually had personal savings with 10x, and I think advisors will be pleasantly surprised when they communicate the brand onto their underlying base. Yeah.
Thanks, Toby and Gareth. So I think there's another question here, but I think we have answered it. So can advisors now access the 10x multi-asset funds, which Gareth answered in his comments about our LISP presence. And then slightly related, but who will manage my relationships now at 10x? Who should I contact at 10x? So
starts with you, Michelle.
Yeah, we're all still here. Yes, yeah. Coreshares team is all still here, so your point of contact remains the same.
Yeah. But I think what advisors can expect is a very high work rate from us in terms of making ourselves available, whether that's in workshop format, conferences around the country. As I mentioned earlier, we're hosting our Think Index Investing Conference on the 14th of September, which everyone's invited to. It's at the JSC. Some of you may have been there before. In the early days, it was high octane stuff, trying to get the passive market going, and I think now it's going to see a maturing of the industry in many respects, and I think we've got a great lineup of topics there. So I think conferencing events, workshopping events. Michelle has got a whole bunch of communication tools that we correspond with advisors with on an ongoing basis, the one thing 10X has also brought the combined businesses. We now have offices in Cape Town and Joburg. So I'm going to stay in the big smog for now and lead the Joburg presence. And we've obviously got a huge big team down here in Cape Town. So just from a countrywide footprint perspective, we're probably well better placed now to cover the market. And I'm from KZN originally, so I travel down there regularly. So I think all in all, whether all these different forms of communication, we will make sure that we are highly visible and very available to IFAs.
And maybe just from our perspective, what we aim to do from a client service point of view in servicing you as the IFA market is I think we can up the level of focus in servicing now. Gareth used to be sort of running the business, dealing with shareholders, dealing with board, which is very distracting. So, it's fortunate that we can take that sort of stresses and strain away from him. So Gareth, with a very much focus around, building the relationships with you as investors, broadening that sort of relationships and going deeper with Michelle, I think is something that we want to really up the ante on, and we can now because we have the resources and the focus.
Thanks, Toby. That actually leads nicely on to another question here from Vaynant, and thanks for this question because Toby has spoken about us as an independent asset manager, so I think it is valuable to touch on this point. Who are your majority shareholders? What is their influence? Is Old Mutual still a shareholder, and what is the impact?
Okay. Vaynant, thanks for that question, and I think this allows me to set some of the records straight. So Old Mutual is not our shareholder. It's the private equity business within Old Mutual. So it's called Old Mutual Private Equity Fund 4. It's an independent private equity structure within Old Mutual, which is totally separate from the Old Mutual governance, let's call it. So Old Mutual can't make a decision on 10X. Let it put it like that. So Old Mutual Private Equity, have got LPs, they've got investors that are different investors. Some of the money is policyholder money from Old Mutual, yes. But a lot of the other money that they manage is pension fund money, it's third-party money that they manage. And they are our majority investor into 10X. They own currently around 60% of the company. Another 40% is owned by another private equity business called the Gami. The Gami is a UK-based private equity business. They're global in nature, and their core expertise is really fintech investing. So they are fantastic from the point of view that they give us that perspective around, what's the latest sort of fintech trends out there. They push us quite hard in terms of exploring different ideas and avenues, and they also got a broader relationship network. And they, behind them, actually, their investors are a lot of sovereign money that they bring. So the nice thing for us is that yes, we have two private equity investors, and management will be coming in at some point as investors, but we have that capital base behind us. So we're very, very fortunate in that, if there's a requirement for capital like in this transaction, it's not a problem for us. We just got to motivate it, and the capital is there and already available for us to access.
Thanks, Toby. Maybe Anton, this is one for you from Greg. Thanks. Understand that costs are important, but please don't get involved in a race to the bottom. All that you need is someone to come and undercut, and then you are no longer the best, in inverted commas. I've used 10X because risk management has been good, in addition to lower fees, but we can now get funds cheaper via a LISP, so no longer the cheapest. And admin at 10X has become very poor, so maybe we should take this up with Greg offline, but I don't know if you want to add any more comments on the sort of the cost discussion.
Maybe
Anton.
if I can just, I see Anton is
help me out with that.
Anton is like struggling. He's drowning here. Is it Greg?
It's Greg, yeah.
Greg, I think Anton owes you a beer at some point. Please send him an email. So, I mean, firstly, from an administration point of view, we were, as new management, we came in and we actually re-looking at our whole retail admin. And with bringing in the Coreshares business, which is used prescient, as most of you guys know, as administrator, it precipitated the issue for us to re-look at our admin. So, Greg, it's going to change, it's going to improve, and we have Caroline Ayla-Ren, who came in as COO, fantastic sort of expertise that she's got, and we believe we can up the game significantly on the admin side. So we hope we can bring you that improvements very, very soon. I think it's already slightly improving, but I think there's a lot of work for us to do. And again, with technology that we want to bring in, I think we can really lift the game in South Africa. With regards to cost, you're right, it's not a race to the bottom. So philosophically, how do we think about cost? When we price a product, we price it not looking at the market. I don't look at a competitor and say, these guys are pricing 10 basis points, or they're pricing 50 basis points, and therefore I need to go 10 beeps lower, because then it's a race to the bottom. So we price it at where we can make a decent margin. Not a massive margin, a decent margin. That's the price we come in, which means we've got to be super efficient and effective in the way we run it. And we need to bring scale into that product to then start making incremental margin on it. So we're sometimes talking about 1 or 2 basis points. I mean, that's the game we play. And so that's how we price. We price at where we feel comfortable that you as a client get a great result. We look at where we make a decent margin, and then what we actually do is we start looking at our global peer group. So that's our peer group, not the South African peer group. We look at our global peer group and see where they are. And what that will do is we will price at a level, in most instances, where we have the efficiencies that is going to be possibly way cheaper than the rest of the South African market. In some instances where we don't have it, yes, we might be a bit more expensive than our peer group. But what we're trying to do is build that capability and that efficiencies with technology, with people and systems in order to be very, very efficient. And that's the pricing methodology. So it's never going to be a race to the bottom for us. We are the bottom.
Thanks, Toby. Maybe while you sort of touched on the offshore market, and obviously they've got significant scale there. Another question for Anton, which I think really is for Anton this time, is based on your experience abroad, where do you think it is to go for the passive industry in South Africa?
Well, I mean, if you look at kind of most developed markets, so for example, the US public equity market, it's up to 50% is in index-based solutions of sorts. Other markets are lower than that. I think here we're something like 6%. Is that right? So we've got a long way to go. All markets are different for lots of reasons, but the whole focus really around effectively paying for beta replication and paying for active as being a principle, which is what's driven that trend in global markets. The same thing logically will happen here. That kind of coexisting of index growth alongside active just logically makes a lot of sense. So I think it's still a long way to go. In most of these markets, like the US, you have huge firms like Vanguard and BlackRock, which have really championed the whole move towards index. In the UK, I mentioned legal in general. So you've had very established large institutions which have been marketing and educating and informing the public around the merits of index management. And effectively, that's what 10x is going to do here. So it's important that we get behind that. We ensure and we position it correctly on how it sits in individuals' portfolios. But yeah, from 6 to 50, somewhere in between. There is a number really where it becomes inefficient for markets. It becomes inefficient in the end, ultimately, then for client outcomes. But that number is a long way away from 6. So.
The one point I like to make around this is that I think a lot of people, and so I don't know if you agree, tend to try and correlate the growth in passive with this extraordinary low interest rate environment that we've had over the last 10, 15 years. And they correlate it to, it's been this sort of cheap money environment, therefore you've had this rally in most capital markets, and therefore passive has grown market share. Whereas I like to counter that argument by rather saying actually it's been a structural shift in terms of how solutions are put together, in terms of dropping the cost out, and to your point, making sure that core beta allocation is achieved reliably, and not paying for expensive active management for that beta component.
Yeah, and there's definitely
change.
something in that argument. I mean, it's absolutely, we've had fantastic returns in markets for three or four decades, and therefore you would naturally think that beta as a growth area is logically part of that. But there are so many other factors that you mentioned which have driven that. In a sense, if you look forward with longer term returns being lower, actually therefore the focus on what you're paying for those to access those returns will even become higher. So there's lots of arguments around it, but that is a definite reason why we've seen growth in index management, and there's also tax reasons in the US which are different, and so there are lots of different reasons and some of those will change in the next couple of decades, but the driving force around transparency, around education, and around paying for what you get. I mean, I think we all know in the world we live in that trend is here to stay, and that trend will continue. So.
Michelle, I think a big belief in the South African market is that we're a developing market, a very efficient developing market, and we're a rich alpha ground. That's anecdotally what most people believe. Now, if you actually go and do the numbers, and this is where Adrian Gore in Discovery is very good. Sometimes you say the statement and everybody believes it. When we actually run the numbers, you get to a different conclusion. And so whilst we've front and foremost, and you've got to active is super important with passive. So I come from active. I come from a fantastic business. There's great managers there that I've worked with, very clever guys, great investment processes in the active space. I think there is some of this is also a bit of a disillusionment with the broader active managers out there in terms of picking a manager consistently to deliver your alpha, and why not blend that risk? As a manager go through a bad alpha cycle or whatever it might be, it's just trimming him, putting it into pure passive, and then sort of play that curve a bit. And I think as this disillusionment starts setting in, that rate of 6. If you look at the European markets, if you look at the UK, 26, 27% is sort of where these guys are sitting, and is going up all the time. I think we should be much closer to sort of that range, specifically because I think the UK has always been a very much of a sort of a pattern where South Africa either follows or we lead, and then the UK follows. And I think it comes from our history as obviously a couple of wars that we fought against each other, but also because of the education system. I think there's big alignment between the South African education system, CAs, actuaries, the way we think, the way we corroborate. If you look at it, move from DB to DC, South Africa was ahead of the UK and all of that sort of thing. So I think that move will certainly start to happen. And as you, as the advisories, businesses and investors start waking up to sort of the fact that it's not one or the other. It's a combo of both, and how do you play that? And there's sort of, active is, yes, there's great managers out there, but sometimes it goes in for a rough ride, and then you've got to be able either to stick through it or to support that manager in times of need. So I think that is a big theme that's going to come through over the next couple of years.
So onto a more specific question, maybe Gareth, you can comment on this, but will you continue to run the Outvest funds? Aren't Outvest and 10X competitors in some sense?
I think, as Toby was saying, I think a lot of firms are competitors in some shape or form. So yes, we are competing with Outvest in some respects, but we've also walked a very long journey with that business in terms of supporting them with the investment solutions that we've built. Outsurance is also a long-standing shareholder within Coreshares, so we've got a lot of history with that business, and certainly for the foreseeable future we're going to carry on supporting Outvest, and we look forward to the combined growth.
Thank you. Toby, a question for you. What are your views on diversity, and where do you stand on it at the moment?
I mean, great question, and unfortunately we're not showing all the diversity other than Michelle sitting in this group. So we are a South African business, we are proudly South African business, and diversity is super important to us. And I mean, just by nature of our board, I think it's very representative of South Africa, and Sonja de Bruin being an absolute stalwart, our chair lady, Yvonne Mayton, we just brought in last year. So I think from a top-down point of view, we're starting to transform, and also from a bottom-up, I think it's very important that we do transform. I think just after this, Michelle, there's a Women's in Finance webinar that we are hosting, and it's for ladies of color that's going to lead that for us. So it's going to be the absolute antithesis of this, just to show you the diversity that we have in the firm. Yeah.
Thank you, Toby. A question from Narina. You mentioned the Vanguard model. Are there plans to also incorporate some of the mutual ownership structure, so unique to Vanguard, or is this only mentioned in reference to their fund management style?
Narina, no. So at this point, we're not envisaging the ownership structure. It's something we've been toying about. So I won't throw it out totality. So it's sitting in the back of our minds and something that we could be thinking about or are thinking about. But it's more in essence of what Vanguard has done in their sort of history of progression, their investment manufacturing, how they took. Vanguard took 20 years before they really hit through. So 10x is now in year 15, 16. I think a lot of hard work has been done in the passive space in South Africa, and we're lagging the global space. But that's sort of more the sort of remnants we want to have to Vanguard, being a very large, dominant, independent player in South Africa, providing you with a very effective and quality, low-cost beta replication strategy. And that's what resonates with me with Vanguard. Yes, you had a founder and chairman that was very vocal about that, and we will do it in some shape or form, maybe not as vocal, but I think that's what we want to be at 10x.
Yeah, I'll just add one thing to that, because the basis of the mutual model in the index sense is that in the end you through scale you push down costs, and that's really the basis of what it is that we. Yeah, that's effectively what we're building. So in the end, the bigger we get, the more we drive down admin costs, custody costs, trading costs, every single element of it. So that's a similarity in terms of what a mutual is and what we are. So yeah.
I think the other trend that we're going to borrow from those large successful passive firms is that increasingly the passive houses have come to the forefront, actually leaders within the ESG space and the sustainability arena. So you don't have to be an active manager to be active stewards of clients' capital. And one of the great benefits that the combined group is going to be able to provide is just more head space, more resources, more everything to ensure that our ESG side of the business is properly implemented, which is something that's come through strongly both with Vanguard and BlackRock and others. And I know, Anton, you've got a lot of experience with that. So I think that's an exciting addition to the passive market, generally speaking. So if you can imagine a solution that's run, strategically and systematically, low cost, but also has, a strong ESG framework around it, and it speaks to diversity in sort of another way as well. I think that's great. Yeah.
That's a great point. Actually, that links on nicely to another question here from Vaynant. Maybe, Anton, you can take a crack at this. The other big growth area and opportunity is alternative assets in the broader sense. Any thinking about passive products here, SA or international, or exposure to renewables, ESG, or anything else?
Big question.
Great question. Yeah, I think so. The context, from my background is working in global markets where credit markets are significant, and your ability to sometimes do index replication is a lot easier. Those indices exist, and therefore creating something which tracks it is possible. Obviously, in the South African market, there's certain elements which are not possible. So we need to, and we are actively talking about it. Think about credit. You mentioned renewables. You mentioned obviously infrastructure. How we think about our a rules-based credit approach over the years to come, which effectively gives our clients access to that part of the market. So, I think every market is going to be different based on the liquidity, based on the indices that are out there, and based on how you do it. What we are, really focused on is ultimately around low turnover, around origination, around not actively trading. How can we make that work in a credit sense? ESG, in some ways, is the same. It's a relatively small market. if you start to go down the world of exclusions, you eliminate a large part of the market, and it's very hard to do what I would say is traditional ESG index that you see in global markets in South Africa. So but we do believe in absolutely providing ESG product and integrating ESG into what we do, but it will be different for this market. And I'm really excited about that. I know there's a lot of skepticism, a lot of cynical people out there around ESG, but it is a huge growth area for good reason in developed markets. And I see it as a great opportunity in the South African market. We have to just design it right. We have to design it to make sense for this market. And I think there's a lot of exciting things to come there over the next 12 months.
Thanks, Anton. So there's a few questions here around platforms. So I know that we did touch on the fact that all the Coreshares funds will continue to be on lists, and eventually, the combined Coreshares and 10x funds will be on lists for advisors. So a specific question here, will the 10x platform be available to advisors? Will there be any platform fees? I don't know if anyone wants to clarify on that.
Shall I take a first stab there? So 10x doesn't have a platform in the traditional LISP sense of the word platform. But it does have a number of very strong product capabilities. So an RA wrapper, for instance, a living annuity. It's well known in the corporate umbrella fund space for offering solutions, particularly into these balanced funds that we've been talking about. So how we open up those product wrappers to the IFA community is something that we are going to be working very hard on over the next 6 months. But absolutely, it's part of the pipeline. Interestingly, a huge part of the umbrella fund that we already manage is already advised, over half. So we do have advisors who bring in clients in there. Michelle, you know better than anyone actually on the LISP access, so we'll be carry on working hard there. And then the other area where I'm passionate about is ensuring that the ETF side of the book becomes more accessible across the board. So there are a number of strategies that we have in the ETF market. Take US equities, for instance, our global dividend strategy, our global property strategy, which we haven't brought out in unit trust format, which means that they're not as accessible on traditional list platforms. So how we take that to the advice market is a challenge because of LISP access to ETFs more generally. And that's something that we'd like to try and work hard at to solve. LISPs are slowly moving, but I think there could be a lot more growth to come there. In fact, I think that is the biggest hurdle in the ETF market actually, is LISP access, so that IFAs and others can start to access it.
Absolutely.
Yeah.
And another sort of related question is, how will the 10x online platform look? Are there a lot of changes coming? And obviously that is the online platform is for the direct-to-consumer business. So I don't know if you want to touch on that.
We are doing a hell of a lot of work in terms of our, as I've had to learn, our UX, our front-end customer experience. So as I said, we've got a development team here, a technology development team here. We're outsourcing some stuff, but we're also now in the process of actually bringing in a very strong development team to help us in that space. So what you would see is at the entry point, it would either be for somebody that wants to invest directly, or for an IFA, or for an institutional investor, and we will customize the journeys, we will customize the reporting, the requirements once you're an investor, to make it very, very client friendly and centric in a typical 10x way, which is just putting it differently than what is sort of standard in the South African sense of the word. I could never, so the example is our corporate umbrella fund, where I think we have 60,000 members in our umbrella fund, been supported by IFAs, advisors already. Just the way that our benefit statement reads to an employee that normally doesn't understand his pension benefits is very, very different to what you get in the rest of the market. So we would be looking to use that sort of type of articulation a bit more. We have a site called My10x, which is a portal for investors. We're going to open that up for the broader market, so you don't have to be invested to access My10x. to help you to build some tools and some reporting for you. And so those are all developments that we're currently busy with. I think the team, they're sitting just over there. I think they got 15 critical projects on the go at the moment. So we're rolling out a new website with the rebranding of Coreshares, hopefully towards the beginning of next year, end of this year. And I think in that you will already see a big change in our user experience and how you as a client can experience us and access us and understand our products in a very differentiated way.
Thanks, Toby. A comment here from Sally, a very different tone and stance to when I was at the company. So hopefully that lends some credibility to the reset and the fresh management that we've been talking about. Another question here about the, who's on the Exco, which I think Toby, you did speak about all the new Exco members that have come in.
So at the moment, because we were still waiting on regulatory approval, the Exco members is basically it's myself, it's Anton, it's our Chief Operating Officer Caroline Naylor-Wren, and Tim Meatherwater, our CFO. So that's the current 10X Exco. And then bringing the Coreshares in, we bring in a couple of other additions into the business. We'll have an expanded management committee, which we will announce to market at some point. Yeah.
Thank you. And what will be the combined AUM post-deal? I know we spoke about 31 billion in May when we announced the deal. I don't know if anybody has a updated number.
The market, how do I say, the market taketh and giveth, so the market has taketh and they've given back again. So I think we're back to 31, 32 billion. Gareth, you're sitting at 12.5 and we're sitting at 20. So, sort of 32.5 is the number. We've got some nice inflows as well. Fortunately, over the last couple of months, Gareth has got some nice inflows. So yeah, we're back at that number. We've got a long way to go. We've got ambitious targets in our business, but I think it sets the scenes nicely. It's now we're at that sort of place where from 32 to grow to 50 in the next 18 months is very, very achievable for us, and then to get to 100 is the sort of the next target. Yeah.
Thanks, Toby. So one more question here about 10X funds being readily available through advisor-led models, but I feel like we have touched on that in terms of availability on lists, and the sort of legacy Coreshares funds are in multi-manager solutions and DFM solutions. Another question from Jeremy: would you be open to partnering with IFA firms using the 10X tech for onboarding clients electronically? Importantly, could the system accommodate DFM solutions which combine active and passive, or will it remain exclusively passive? Perhaps that's more towards the corporate umbrella fund business.
Jeremy, that's again, you seem to be asking the hard questions today. It's a very relevant question in terms of our tech build-out. So strategically, what do we do as 10X? And so from a tech build-out point of view, the way we think about it is, firstly, we want to build tech solutions for ourselves, tools for ourselves that is both in terms of how we bring on customers, how we engage with customers, and then how do we sort of give them nice tools on engaging with us on an ongoing basis. Now, what typically happens is that these tools will be, I think, so differentiated and so niche and really, I think, it will make a massive benefit to most people using that they would and say, can I get this? And so there is very much along the lines of the model of, getting some of our tech, buying some of our tech, or doing a partnership where you get our tech, I think is definitely on the cards. So as we develop this, and no, it won't be just a 10X product and you can get our tech. So again, to our point here, and we're going to be very ruthless about it. For us, it's about you as advisors got to build the best solution for your client, and we cannot restrict you and say, you just got to use 10X for that. We believe, fundamentally, you're an advisor. You need to look at the client's various needs, and active and passive must coexist. And we're not going to be an active manager ever. We're a passive manager. That must say we are not a multi-manager, so we're not going to do that. We're a rules-based passive manager. That's philosophically which we won't move on. And so in bringing in our tech, surely we must be able to expand that in terms of your journey, that you can have those tools for your overall portfolio. And hopefully we'll get there in time.
Yeah, I think just wanted to add to that point around us not being a multi-manager. In the end, its point around solutions is that the blending of active and passive, but we will not be in that space to create that product. Really important to us is to create the Manco, create the entity which allows partners to build that themselves, with index building blocks coming from 10x, but with best-in-class active added to that, and effectively creating the entity to allow that to happen. But we won't be in the space of actually building and managing and selecting. That's not. I know that a lot of other houses are doing that. It's not where. And we will, as Toby says, we will be an index-based business, but creating those solutions which allows products to be built which combine active and passive. We want to enhance it and provide that solution for yourselves.
Thanks, Anton. Thanks, Toby. A question here from Lunga. What is your policy on financial literacy and empowering financial consumers of your products as part of the FSCA treating customers fairly principles? Do you also train advisors, example, train the trainer program?
Lunga is a super important component, and I mean, what you will see is a lot of that coming from us in terms of educating, and specifically in the financial services space, where we're totally underrepresented in terms of passive investing. So I think you will see a lot of that coming from us, educating the market on that. Just as one of our programs, we're bringing in a couple of graduates for training at 10x. We take them then to the FSCA for further training. They've got a course running there on financial markets. I think it's a bunch of 20 or so graduates we're bringing in. And so it's very important for us to do that. We believe that the only way we're going to move the needle in a substantial way in this market, from the needle up from the 6%, is really through education. It's also part of our diversity policy, part of our ESG and corporate work that Anton and the team is doing. It's super important for us.
Maybe I can add to that, Toby, that at Coreshares we've always done a lot of advisor-focused index investing training type of webinars. So we've partnered with DFMs to talk about how they blend active and passive, and we plan to continue doing all those kind of webinars, and again our conference is a huge source of education. So hopefully you can attend that.
I mean, whilst you're reading that, Michelle, I mean, a couple of years ago, we went so far as to have a movie night at the JSE with popcorn. Premiering our documentary on passive investing, how to use it, the behavioral finance components around it, which is still sitting on our YouTube channel and available for viewing.
And on Asset TV.
And Asset TV.
Yeah.
So I actually, both firms have got a strong kind of multimedia culture, and actually a big investment into media, generally speaking.
I was just thinking, and I might get, I don't know, the CFO is not here, but Michelle, I want to put something to the audience here. Okay, so there's a book called Billions. I think Anton, you introduced me to the book. It's the book of how Vanguard started. It's a book about the growth in the index market. It's a very balanced book, actually. And so what I would like to ask to the audience out there, if you're still there, send Michelle an email. Send Michelle an email, and we will send you the book free of charge. Just for your reading. I think it was certainly, in my journey moving from active to passive over the end of last year, I took my gardening leave and I read this book, and it's a phenomenal piece of work, and it's actually written in a very light-hearted way. It opens with the story around Warren Buffett having a competition, as most of you will know, around where would you place your money for the next 10 years and who will win. Now you've got probably, I believe Warren Buffett is probably the best stock picker in the world. I mean, he's not just the oldest, but he's got the track record in that. And being a value investor, he's seen a couple of movies. So when Warren went and he took the S&P 500, compared that to I think it was a fund of hedge fund manager at the time. And I think it was, I don't want to tell you the whole story. Please read the book, and I think it will be very much understanding where we come from when we talk about passive index investing, the importance of that, the blend with active and passive, and also the risks that there could potentially be in the passive or the financial services industry around passive investment, especially large-scale funds, size, all of those sort of things. So it's a very, very balanced read around that.
Yeah, it's actually trillions, not billions.
Sorry,
Billions is not
trillions.
trillions.
You were talking about the movie night, so I got it wrong. It's trillions is the book. Michelle, you will get it.
And actually, the author's coming to videoing into our conference next month.
Oh my word!
So he can't sign your book that Toby's gifted, but he can wave, I suppose, on the video. Thank you for the purchase. Yeah.
Yes, I think we've just got a few more questions. If anyone else has got any others, please ask them now. So we're going to start to wind down here. Another question from Michael about how diversified is your team and your exco. I feel like we did comment on that. Will Coreshares / 10x be offering a list themselves? Again, I feel like we sort of have addressed that. I don't know if anyone wants to add any comments.
That's not on our strategy radar at this point at all. No.
Jeremy is just clarifying his question wasn't about the corporate benefits, but rather at the retail level, similar to how Artverse works in terms of how we combine active and passive. But again, I think we answered that. So let me know if not. Yes, there will be a recording available, so you'll get an email. I think tomorrow it goes out automatically from Zoom with the recording to the session, so you can share with any colleagues. Yes, my email address will be in the follow-up email that comes out from Zoom, so you can ask me for the book then. We've already got a few people here asking about the book that you promised, so you're going to have to take Tim for a beer tonight to get that budget. So I think please state the name of the book again, and I understand why, because there was a bit of confusion.
So it's trillions, right? And it's Eric Balchunas, I think, is the
yes.
author. Yeah.
So again, I think that's, unless anything pops up right now, we're going to wind it down there. Thank you so much, Toby, Gareth, and Anton for the time, and thanks everybody for dialing in to come and see us in our new head office here and meet everybody. And in case we didn't get the message through, there is a conference taking place next month, September the 14th, at the JSE in Sandton. Please register if you haven't already. It'll be a half-day event. It will end with a lunch, and we'll all be there, and we'll be unpacking lots of different elements of index investing and blending, core satellite, all the kind of things that we touched on today but haven't unpacked in great detail. So with that, thank you very much, and enjoy the rest of your day.